Today, you're going to hear the latest on China Evergrande, and before we get there, let's look at the charts on what has happened. You realize that China Evergrande's share price has shot up by 27.3%, correct? That was the start of Thursday's opening price. But that gain has slowly been given back to the market already, and we'll get to that in a while. So what has actually caused the share price to jump up? It's mentioned that China Evergrande has resolved the coupon payment for one of its domestic onshore bonds. This bond is listed in Shenzhen, and because they've repaid this, market actually had hope that they would avoid a default. That repayment of interest was actually good news for all its peers. You see that Country Gardens actually gained 7%, Sunac China has actually gained 9%, and Guangzhou R&F properties have gained 7.5%. These three are also atop the list of net debt companies. You realize that Sunac and Guangzhou R&F are smaller companies based on market cap with a sizable debt. Whereas Country Garden is having 24% net debt but has a market cap of $24.1 billion. That is why, in terms of share price, for the last 6 months, Country Gardens has relatively done much better than the rest. Let's look at Sunac China, one of the very leveraged companies also. They've lost 60%. And how about for Guangzhou R&F? They've also lost close to 60%. But I've actually found another company that's crashed even more than these three companies, and that is actually Sinic. As recent as 17 September, it was trading at $3.85, and right now it's close to 50 cents, losing 87% in total. But let's drop at the question, why did China Evergrande give back majority of its gains already? Why has it lost 15.71% since Thursday's opening bell? The key reason is because there is a second bond that is due, and the interest of it is $83.5 million. This is a $2 billion offshore bond that was due on Thursday. And not just that, they have one more interest payment of $47.5 million due next week. Looking at final details, you realize that BlackRock, HSBC, UBS are all major bondholders. They also have given a 30 days grace period. That is why China Evergrande has yet to fully default on it. However, as we can see over here, some bondholders have actually given up hope on the coupon payment, and maybe they do know a thing or two about what's happening on the inside. And if we look for tones in reports, you realize that mention all the good things but did not mention the company's offshore debt. Now, question back, how big exactly is this offshore debt? This summary table really shows the severity of it. You realize that the monthly repayments on the dollar bond are the black bar, and it's actually the majority of it. As mentioned at the start of the video, the local bond, which was repaid, is actually part of the pink bar. In the subsequent months, there are multiple bonds that require interest payment. And I've actually checked, there is no bond due in 2021, there's only bonds due for 2022. But China Evergrande is already struggling on interest, not the principal. So if interest is so hard to pay, what about principal? Especially now when everybody already knows that they are distressed. I'll be surprised if any international investor gives them new loans to help them roll over their existing ones. That could be the reason why China Estates, their second largest shareholder, has actually ditched them and started selling shares. They have been cutting losses on China Evergrande, and take note, their average selling price is $2.26. It's also mentioned that they may be selling the remaining stake of 751 million shares. Could he have more insider knowledge than us? Do take note that previously in mid of August, Vice Chairman has actually sold some of the subsidiary shares that he owned. If there's a major shareholder selling, it's not surprised that the share price is suppressed. So expect extreme volatility for China Evergrande in the coming weeks ahead. Let's move back to understand the impact of the offshore bond. Offshore bondholders are widely seen as near the bottom of Beijing's priority list of China Evergrande's creditors. Although their assessment may depend in part on how worried authorities become about Chinese companies' access to dollar funding. Bonds actually have seniority in rank. When it comes to liquidation, those that are more senior in bonds have to be paid first. And if there's prejudice against the offshore bonds, it will affect how international investors view Chinese bonds, even for the rest of the Chinese companies. Latest reports have suggested that Beijing has instructed Chinese authorities to prepare for China Evergrande's failure. That includes how to manage their existing projects as well as suppliers whose livelihood depends on China Evergrande. That includes how protests are actually being tolerated. And it seems my assumption that China Evergrande will default may eventually come true. And I'll end off with this point to really highlight that China Evergrande right now is a volatile stock that I'll be concerned to buy. Even if share prices move upwards by a bit, I'll be looking at it with skepticism. This is actually a 1-year chart of China Evergrande. You realize that at multiple points on the chart before heading lower, it always inches up. And this 27.3% gain that we mentioned at the start of this video could be one of them. If I'm concerned about directly investing in China Evergrande, where else can I be buying? Smash the like, smash the subscribe. On the 4th episode, I'll be finally covering on where I'll be keen to invest regarding this whole saga. I'm close to completing my thoughts, so stay on for it.